I had a client ask me how should they invest their £42,000 worth of savings into property. Now, 9 times out of 10, investors believe they should buy a cheap property. Hi, I'm Dwayne Squires, and in the last 12 months, I've serviced £6 million worth of property for clients and I. And over the next few minutes, I'll share why it's wrong to take that £42,000 worth of savings and invest in cheap properties. Looking at option 1, this is an example of a property that I purchased in a cheap area, and it cost me £20,904 plus 10 pence. Option 2, which is 75,000, an example of a common property that we secure for ourselves as well as for our client. From the outset, you look at it and you think, well, option 2 is nearly 3 times the price of option 1 property. Let's get into the numbers. So let's go into the actual numbers in detail. So as you're aware, the purchase price is 20,900, option 2, 75,000. Now in the case of option 1, it will be purchased without a mortgage. Typically, lenders will only lend above a purchase price of like £52,000. Less than that, and apart from maybe a few, they just won't lend it. And if they do lend, it will be at a really high rate. Option 2, you can get a mortgage, and this really helps with the leverage we're gonna show later on. Total cash needed, 23,000. That's factoring in your legal costs and other costs associated. While option 2 is 27,000. You have to factor in like your mortgage costs, your solicitor costs, and other associated costs as well, like stamp duty. Now rent, you can see rent at 350, at option 2, 650 conservatively. You might be thinking, well, option 2 is 3 times the price of option 1. The rent is only just half of option 2. And then monthly costs, because we're not getting a mortgage on option 1, there's none of that. We're just paying for insurance and management at £55. Option 2, because there's going to be a mortgage, looking at a monthly cost of £320. So when we take off the monthly costs minus the rent, the net cash flow, i.e. the money in your pocket, is going to be £295 for option 1, and option 2 is £330. Return on cash invested is 15.5 for option 1, 14.7 for option 2. So looking at this, you may still be leaning towards option 1 because you're putting a little bit less money and you get a slightly higher return, but that's on paper. And this is why I wanted to demonstrate buying cheap properties doesn't necessarily make sense. Here's why. What you will not see from the numbers is how realistic and how consistent will I get that income. In these type of areas where this property is, it's going to be a high amount of crime, low employment rate. The stability of tenants that I've found and experienced is null and void. It's very low. Tenants could be moving in, 6 months they move out, or even earlier. There's going to be potential burglaries. You could put a new boiler in and a few weeks later it's taken out. How consistent is this? And effectively, your repair costs will be going up because you've got more tenant fines, you've got repairs to deal with as tenants move in and out. Whilst option 2 is a much better location. There's higher employment rate. It's closer to where people want to live. You've got higher ownership rates. It's just more desirable. So the consistency of that rent is a lot higher. Tenants will be living there for typically 3-5 years compared to 3 to 9 months here. And because there's a consistency of rent, you've got less costs like repair costs, tenant fine fees. And a key factor is, because of the desirability of the area, there's a lot higher chance of capital appreciation. So with the 42,000 being very direct, you'll be able to buy 1 property in each example. But with the remainder of the money that you have, a lot of that money will be going towards paying for repairs, finding new tenants. Your money is effectively not growing. Whilst as option 2, you'll be having 1 property, and that extra savings that you have will be joined alongside the net rent that you're saving alongside that, building that capital growth, plus the growth in the property purchase price. So you're winning in 3 ways. On the face of it, option 1, buying cheap properties, makes sense, but when you look at what the numbers don't tell you, option 2 stands out clearly. Found this video interesting? Watch this 6-minute video on how I explain how to profit from cheap properties correctly.